All right, so I apparently just talked to myself for the greater part of 20 minutes. All right, hopefully you can hear me now. Now that I've lost everybody, I had to restart this thing from scratch. We're here to celebrate Cyber Monday. And if you're a SpotGamma subscriber, I will be on at 1 o'clock, so it's about 40 minutes from now, 45 minutes from now, with full sound. That is the plan. We're live. All right, Deviant Fox. Hopefully you can hear me. You hear me? All right, money. We're in. For SpotGamma subscribers, we'll see you at 1 o'clock today. And if you're not a SpotGamma subscriber, our Cyber Monday Black Friday deal is you get 75% off the first month of SpotGamma Alpha. Alpha is going to show all the tools that I was talking about today. So go and check that out. It's a great deal as we cover the next critical few months. So let's go and dive into what I was covering before. And I'm going to cover again in full sound. Lost you at the volatility dashboard. All right, here I go. So let's talk about the prevailing dynamic in the market. We, in our founders note, we write this every single morning. We're talking about the fact that the market had a tailwind. The tailwind was the collapse of volatility or the decline of volatility from what was a very volatile period into mid-November. At OPEX, you lose a lot of put positions, a lot of VIX call positions that releases or removes a lot of the positions. Sorry, I laughed at some chats there. That removes a lot of the positions that were driving volatility. And then when volatility drops, it helps the market to lift. So this was the chart in our founders this morning. You see immediately at November OPEX, we rally 5% in the XPX into Black Friday. And then our argument was like, look, at Black Friday, we don't have the catalyst for the market to go up anymore. Does that mean the market has to tank, like viciously sell off? No, but we don't have the reason to be like weighted very long. And the problem with the market being weighted very long is if we go look at the vol dashboard here and we check out term structure, what we see is that there is relatively low implied vols this week. So this is red, statistically low. And then what you can see is right in this 12/5 date, right, the vols are relatively elevated. And this is because of the upcoming NFP and delayed PCE data, right? So we need confirmation for the rate cut for FOMC next week, and that likely comes with these more critical data points of non-farms and PCE. Tomorrow we have JOLTS and some other data. But what we're flagging here is that the forward implied vol, which predicts or sort of forecasts where volatility should move, and it does that through an equation that looks at what implied vol is between two expirations. You see forward implied vol is over term structure, which is that teal line. That tells us that traders are pricing in an event. It's an important event or events for the market, and that tells us that vol should be held up into that date, right? So this week, we have some lighter data points. Forward implied vol is lower, which tells us that vol may come down a little bit. So that's mildly supportive of markets, not like what we had. But then after that, at 12/5, and then with FOMC and beyond, implied vol is estimated to almost be higher, right? So if you think about that, if forward implied vol is lower, that tells us that there's a tailwind for vol to come down. Market should get a lift, right? That's a tailwind for equities. We don't have that tailwind right now because forward implied vol is forecasting some consternation around these events. So the catalyst of vol declining to help the market go up, just not going to be in the market now, at least until FOMC. Now, once FOMC, if that clears without issue, then you start talking about the Santa Claus rally dynamics. And the big number to pay attention to is 7,000. And I say that because this is just a simple plot of open interest for the SPX. You can see 6,800 has a lot of open interest. And then look at 7,000. It's massive, right? Massive amount of open interest up there. That's the obvious round number magnet. And then you kind of just go on up there. And that could be the big level for the end of the year. So it's about time and price. And right now, if you look at this setup of time and price, we just are likely to grind here until these data points clear, vol can come down, and that little final vol squeeze, particularly over the holidays, right? Because the holidays kind of advance time decay, then that can help the market lift. Now, if you look at positions in the S&P 500 just from a positional perspective, right, and we look at what is going on, trace this map updates every 10 minutes throughout the day. Red is negative gamma, where price should move fairly fluidly, and blue is positive gamma. And what you see is there's a ton of positive gamma up at 69.50. There's a ton of positive gamma down, I don't know about a ton, but there's a lot more relative down at kind of 6,700. And we're just red in between there. Red means that price should waffle through this area. This is kind of the chop grind positioning where you can get 1% swings up and down, and ultimately nothing happens over the course of several days, right? But the bigger takeaway from this is that where are the big positions that are non-zero DT? If I toggle this zero DT button on and off, you don't really see positions change at all. And that's telling us that the biggest position for today, the big stuff that matters, is this stuff right here. And what this is a Captain Condor trade. And it's a zero DT position. So the zero DT stuff is a big driver of what's happening today. And it's a huge position, actually. So if you look at net open interest, which is what this is, and you hover over this, you see it's a 45,000 contract position. We spent a lot of time talking about the JP Morgan collar trade, which is a 30,000 position. So this 40,000 lot is huge. And I think this is kind of the predominant thing in the market today, or the driver in the market today. And what we saw with the market, the way it traded, was we moved down to that level, 68.10. And HIRO, which is this purple line, if this is going down, it's telling us there's negative pressure on the market from options trades. And where does HIRO sort of stop out, right? It stops out right when we test this level, 68.10 to 68.05. And then you can see we've gotten more materially positive now throughout the day once this level was sort of tested. So you want to keep an eye on this level, because I do think it's a big magnet for the day. Even though we've rallied pretty well, we're all the way up at 68.34 right now. I want to be cognizant of where these two strikes are, because the market has a tendency to move to these various levels. Now, 68.75 is way up there, but if the purple line continues to trend in this direction, I don't want to say that's a guaranteed, but the idea of looking for the market to move to one of those pinning zones, considering those are the only positions in the market right now, that's something I just want to be aware of and keep an eye on. Again, the idea that we test one of these massive levels where there's 40,000+ contracts sitting there. So we'll dive into this a little bit more at the subscriber webinar at 1 p.m. Again, if you go to SpotGamma.com/Black Friday, you can join that webinar, and you also get 75% off your first month, which includes all the tools that we are covering today. Now, one of the things that we covered in this morning's Founders Note was MicroStrategy. And the reason I think MicroStrategy is interesting is because it's getting crushed, right? So if you look at Bitcoin overall, it's really having a bad day, down 6%. And if you look at MicroStrategy, it's down even more. And the reason I find this fascinating is, number one, crypto as a percentage of the indices has gained. You have Coinbase, MicroStrategy in the NASDAQ 100. You have some of these other names like BMNR, et cetera, there. But it's a proxy for risk. But what Bitcoin may not be a proxy for is MicroStrategy's sort of success as a company. I don't know anything about the fundamentals of MicroStrategy, so please don't take this as trading advice. I just think it's interesting from a game theory perspective. If you've ever watched Margin Call or The Big Short or any of these movies, or if you think about George Soros and the Bank of England, right? When you know that somebody has a weak position and you think you can force them out or lever them out of their position, that's where you start to get some of these biggest trades of all time. You know, Nick Leeson and I forget the name of the bank. So you get all these situations where when the market knows that someone's kind of on the ropes, they can push positions against them. And I'm not saying that's what's going to happen with MicroStrategy here. So please don't take this as anything else other than a fun chat or conjecture. I'm not suggesting that MicroStrategy is going to go business, because I have no idea. But it's interesting. I was just talking to somebody, and they were talking about wanting to sell credit spreads. And this is a name where I don't think you want to sell credit spreads, particularly put spreads, because of the stuff we're seeing in positions. So if you look at on Friday what happened, this is our scanners tool. And what the scanners tool shows you is how a name moved over the last several days. So if I bring up MicroStrategy on our scanners tool, and what we're looking at here is put skew percentile and call skew percentile. When I hover over this, on Friday's close, we saw put skew percentile. So what was the 25 delta put versus the at the money was more expensive than it's been in the last 70% over the last year, right? So that's pretty elevated, but it's not like crazy. And if you look at call skew percentile, it was 30th percentile. So no one really wants calls, and puts are pretty bid. Well, puts have gotten really bid now as we look today, obviously, because the vols in MicroStrategy have jumped so much. If we bring up MSTR here, you can see statistically we're in the Z-score really elevated, 100% plus implied vols go out in next year. That's really quite rich. If you look at skews, you can see these are 1 month skews. They're kind of blowing out here now. The whole term structure is quite elevated based on some of this. And what came about was this conversation, and I had this queued up before. Hopefully, I still have it here. Where this is the CEO of MicroStrategy, and let's see what he has. So he gets into this a little bit more, but if you heard him say there, hopefully you could say, he says, we could sell Bitcoin if we go below our MF. We lost it again. It's auto muting me. Very strange. Sorry, everybody. Every time I talk, uh, every time I talk about Bitcoin, it seems to lose. That is a weird. I'm not back. Hello. I don't have a weak connection or what I got going on here. It's the weirdest thing, man. All right, we're back again. That is really odd. This technology, spotgamma.com/Black Friday, helped me get a new microphone. Anyways, so MicroStrategy down here. Did we all hear the clip about the Bitcoin selling? It's really quite interesting. So this is the clip that's got everyone hot and bothered here. Okay. So that is the statement. That's the quote that apparently has MicroStrategy dropping. And this is the reflexivity of the positions, right? When people know or other people know that you may be on the ropes, right? They come and sell positions against you, like the Soros stuff, etc. And Michelle, I hear the subscriber stuff. We're gonna be a subscriber live at 1 p.m. So this is our SpotGamma open interest. SpotGamma open interest is modeling of buy-side positions across all U.S. listed equities. We are the only one, to my knowledge, that does this and does it effectively. And so what you see here in blue is put positions all the way down, right? This tells us that funds are long puts, and they're not massive, right? If you hover over this, you're getting 5,000 lot, 5,000 lot, 5,000 lot. And the idea here is that if funds own this, market makers are short. And so this adds to the reflexivity of a stock going down. If a stock goes down and there's a bunch of put positions down there, then there in theory has to be more stock that has to get sold. And you can't really sell Qs to hedge your MicroStrategy position. You could sell Bitcoin to hedge your MicroStrategy position. But if this is reflexivity in the stock going down, then that could, in theory, feed back into Bitcoin and also have that pressure on Bitcoin, right? So they're all linked. And that adds a drag, in my view, to single stocks as well, right? Because you have the crypto complex dropping, and that could add just general pressure to the market. So who buys these puts? It's not just people speculating, but we go back to the idea of those convertible bonds. You may have a price insensitive buyer of puts in MicroStrategy to hedge out convertible bond debt, for example, or other bonds, right? That MicroStrategy was selling historically in order to hedge out their position, right? Because equity goes to zero before bonds or credit does. So you could end up in a situation where if you're worried about MicroStrategy default, and I'm not saying they are, I have no idea, not that anyone's going to from MicroStrategy is going to listen to this conversation that I'm having here, but if you have that situation, that's where put positions could really start to spike because you go, my bonds could go to zero. I'm going to buy equity puts, right, to hedge out my downside. And so that could add to this reflexivity. And the takeaway for subscribers here is this. I don't think you want to get into the arena of selling MicroStrategy puts because of the potential reflexivity here. Now, what could be more interesting is you can get into call flies in this situation because MicroStrategy, if it was to rally or things seem to be okay, right, then what you're going to see if you look at the volatility dashboard here, kind of like we were talking about silver briefly there. I don't know if that made it through. Then what you would see is as the stock rallies, you would see this call skew possibly flatten out as vol comes down, right? So similar to how we were talking about with silver in terms of stock going down and vol coming in, you could have MicroStrategy as it rallies, that call skew kind of flattens out a little bit. So the headline here is I wouldn't look at selling puts in MicroStrategy. These yield strategies could be in a little bit of trouble as well. So you just want to tread lightly in these areas where that risk is real and that reflexivity risk is real. But it's going to be a fascinating name to watch from the game theory perspective to see how this runs. Again, if you found this information interesting, if you want access to HIRO, if you want access to Trace or the Compass tool, if you go to spotgamma.com/Black Friday, then you can get an incredible deal of $75 for your first month. And we're going to be on subscribers here in about 20 minutes at 1 p.m. I will fix my audio for subscribers, get clear audio. That's the deal we make with them. And so looking through the chats here, I'm back. That's always good. This could be trolling, but Flores Capital, what's up to you guys? You guys got a bunch of SpotGamma traders. That's awesome to hear. So hopefully John Stunts, that's good to hear. Dan Prophet says, you want to know how scalpers can gain edge using SpotGamma tools? Let's talk about that in our SpotGamma webinar. But here's what I will tell you is that when you go and you look at the big positions, so we just take a quick look at Google. Google is one that we talked about, big positive gamma, and we liked it from kind of 315 up into the 330 area. What we see here today as a positioning, our latest positioning shows positive gamma at 290. So this kind of 300-ish area shows relative support because gamma is positive below there. That suggests that dealers will buy in that general area. And then we have negative gamma now all the way up into the sort of 320 to 330 area on a relative basis. So if I was swing trading Google, I'm looking at longs into that 320 to 330 area and then, buying the dip kind of in that 300 neighborhood. That's generally where I would be looking for swinging based on the current positions. And what are those current positions? If we open the open interest tab, you see there's positive gamma here again, positive blue puts. Someone are short puts. People are also short calls, kind of in the money calls there. And then there's negative gamma, particularly the big negative call position, 82,000 short calls. Dealers are short those calls, right? So big funds or someone else is long a bunch of calls at that strike. And then you see more positive gamma here back in the 325. These aren't massive positions. A lot of these positions did reset with November OPEX and kind of after, but we're going to anticipate these positions are going to start to build up a little bit into the December expiration. So when you look at these gamma positions, that's how this can help you determine which strikes are kind of interesting to trade or interesting to set up. If you look at Tesla, for example, massive gamma up at this 440 strike. That's a big resistance level. So if you're playing long in Tesla, that's what you want to watch out for. Now, what's interesting about that is there's positive gamma all the way down to 400. So what does that mean? Buying dips and selling rips is the overall sort of areas like this sticky area from 400 all the way up to 440. If you look at the Tesla price chart, that's what you'll see is the prevailing range, right? If we just zoom out a little bit here, you can see that, right? We've really stuck inside this range since really November OPEX. And if we get over that 440, particularly 450, there's this pocket of negative gamma, right? So I think this is going to be the big resistance strike into next week, that 440 level. So that's kind of how you want to scalp. You can, I think, lean against that level, for example. We could talk about this more in the subscriber webinars. I also heard from a Greek friend of mine in Florida who wants to talk more about selling credit spreads. We're going to talk about that on the webinar too at 1 p.m. So if you find any of this information interesting, you want to join SpotGamma, go to spotgamma.com/Black Friday, and we're going to be kicking off the SpotGamma subscriber webinar in about 15 minutes, so you can join there. I apologize for all the audio issues today. Just to get back to it, if you take one thing away from this call today, number one is we need the time and price to line up. So we need the clearing of some economic data to sort of unleash the rally. Really, the FOMC, I think, would be the trigger for the final move up into 12, up into 7,000. If NFP and PCE are just really in line and people can move to assuming you're going to get that pure rate cut, and maybe we get that rally a little bit earlier, but I think we need some of that data to help us clear that way all the way up. Now, that being said, we want to be aware of the potential for a sneaky upside move here to this level for today in Trace. It seems a little bit ridiculous, but the good thing is, even though that upside move seems ridiculous, it's 45,000 contracts. And you can buy very cheap zero DTE positions, right, to express some upside. We'll talk about that in the SpotGamma subscriber chat here in a few minutes, how you can play that for really cheap, right? So it seems ridiculous, but if you can bet on it for real cheap from a Kelly perspective, then maybe that warrants a stab at the long side. Just for today, right? If we rally to 68.75 for today based on this position and that position is gone for tomorrow, then why should we be up and around that level for tomorrow? So some things you want to think about if you are not yet a SpotGamma subscriber. And this map updates every 10 minutes. So if Captain Condor closes his position early, you will be the first on the street to know, maybe second after the person that traded it, right? Then you'll get the latest and greatest information there. This is, again, called Trace, and it's part of SpotGamma Alpha. And you can get nearly free. Let's just be honest. This is about as cheap. This is about as free adjacent as we get around here for your first month. So spotgamma.com/Black Friday to get that deal. I apologize for all of the open interest levels. If you have any, thank you, Michael, for the kind words. If you have any questions, email info@spotgamma.com. And SpotGamma subscribers, I will be talking to you in about 15 minutes. We'll get into some positions, zero DT positions. We'll talk MicroStrategy, trading ideas, whatever you got. Also on the question and answer side, we will be there. So we will see you all in about 15 minutes. Again, apologies for those audio issues, but we'll get them cleaned up with SpotGamma subscriber Q&A. Michelle, I noticed you there. Michael, thank you very much. All right, I'm going to wrap it up and get the old voice box a rest, even though I was talking to myself for the greater part of the last hour. I'll get the audio cleaned up.